All right, welcome to the daily market recap for Thursday, October 9th. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups for tomorrow, like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments section. Starting things off with the NASDAQ, pretty solid day today, just consolidating over the 5-day moving average on declining volume. We had a quick sell-off kind of intraday, bounced right at the 5-day, closed right at the high of the day, slightly below the high of the day, but you get the picture. Again, buyers are stepping in on any dip that the market is giving us. S&P 500, very similar action, bounced at the support gap, just under the S&P 500. Uh, on a broader basis, there's some groups breaking down in the market that we'll cover with the industry ETFs, which is impacting the S&P 500 a little bit more than the NASDAQ, but still S&P 500 closing over the 5-day moving average, only down 0.3% today. The growth stocks of the IWO, or growth stocks of the Russell 2000, which is ticker IWO, choppy day today, but still a close over the 5-day moving average on very light volume. Nothing wrong there, only down 0.4% today. ARKK, slight gap down, inside day over the 5-day moving average on declining volume. Again, to me, that's just consolidating after yesterday's very strong action. And then taking a look at IBIT as a way to track Bitcoin, little bounce at the 10-day moving average and then closed well. I don't love how, once again, we take out like previous highs and then we immediately start to sell off. We take out previous highs, immediately start to sell off. It's okay to like consolidate after making new highs, but we don't want to see it like take out today's low. And I think at that point, that would be a little warning sign for the market. Getting into the industry, or sorry, the liquid leaders, we have NBIS starting things off up another 8.7%. This is after the shakeout on Tuesday under the 5-day, right to the 10-day moving average and the support gap. Really good buy spot against that 10-day, the support gap, if anyone took that. Very nice close today, again up 8.7%. LEU up 2% today for a new all-time closing high. Still over the 5-day moving average. Nuclear stocks setting up really well. RKLB up 1.7%. Inside candle on lower volume with plenty of air to the 5-day moving average in the gap zone. Another one that made a new all-time closing high today. Robinhood, another one with a new all-time closing high. Higher highs, higher lows off that 5-day moving average. We didn't take out the previous highs, like the intraday highs, but on a closing basis, this is the best that Robinhood has ever done. Tesla continues to just kind of chop around. We had the test of the 20-day EMA last Friday that we had a nice kind of day and a half bounce from. Since then, just kind of pulling back into that 20-day at a higher spot between a support gap. This is our second unfilled gap down. So the sooner that we can fill that gap down, the better. This has earnings on the 22nd of October, so coming up a little bit. DE continues to just tighten above the 10-day moving average. I think this is going to be a really good barometer for the market, whether momentum is going to continue or if momentum starts to break down, because the stock has been a momentum leader. I mean, rallied from $15 up to, what was it, $95. And it's hard to think that this will break down without at least testing 100, given the market that we're in, but we'll keep track of that. I don't love when like stocks make new highs and then stall, but just given how strong the market is, given that volume is drying up and it's like a pure consolidation, we're going to see a pretty explosive bar either to the upside or the downside here, and that's going to give us feedback on the market. AMD, really good action today, consolidating a little bit after yesterday's 11.3 to 11.4% move. Slightly above average volume, but still well below the volume yesterday, down 1%. Alibaba pulling into the 20-day moving average for the first time since the breakout. That's usually a great risk reward spot. So we'll keep that on the watch list that we'll cover in a second here. A lot of the Chinese equities today did come under pressure. We'll cover that in the industry ETFs. And then KTOS, we talked about this being a frozen rope where it was just gliding over the rising 5-day moving average, higher and higher and higher. This is a change in character for the stock. We had a gap up, really big push intraday, and then massive reversal down 6.8%, losing the 5-day moving average. So first close under the 5-day since we broke back above that consolidation on September 9th. We do have a support gap here in the 10-day moving average, so we'll see if that kind of sell-off gets contained there, or if this is a character change that really kind of marks a short-term top and resolves to the downside. Getting into the industry ETFs, intraday action, the the market was lit on fire with solar stocks, with TAN up 3.1% on a closing basis. From the watch list yesterday, SEDG, we had that pull into the 20-day moving average, takeout of yesterday's high. This was up 17% at one point. Of course, it was the one trade that I didn't personally take from my own watch list, which kind of hurt. But a couple people in the room got it, so I'm happy for them. Still up 8.4% after today. Other solar stocks, NXT made a new all-time high, up 6.8%. And then ENPH had this really big move through this resistance gap. It was up about 8% at one point today, and then ended very weak, down 1.8%. Once this stops breaking the downside, I think solar stocks will become very significantly easier to trade. XBI biotech ETF continues to just skyrocket higher. Kind of mad at myself for selling into strength on October 3rd. Now we'll be watching for a pullback into that 10-day in the support gap. NLR, the nuclear and uranium themes, consolidating over a rising 5-day moving average. The only thing that makes me like slightly concerned is we've had a lot of volume come in, like well above average here, but without any price appreciation. So there's a little bit of a churning aspect to this price action. Whether that resolves to the downside, I wouldn't just like short uranium or nuclear names because I saw this. But if we do kind of resolve to the downside, it makes sense that we saw some churning here. Blockchain ETF, new all-time highs. Um, Cannabis ETF continues to kind of churn here, but on lower volume, right at previous highs, right below the resistance gap, closing above the 5-day moving average. Tilray, TLRY, reported earnings today. Pre-market was up 34% at one point in the day, ending the day up like 21%, down a little bit after hours, but the cannabis theme is definitely one that I'm starting to focus on. It really feels like this is bottomed here. Software theme, really good consolidation. We had that shakeout on Tuesday. Nice gap up, reclaim the 5 and the 10-day moving average yesterday, and then very similar consolidation on low volume today. This looks like a very quality bull flag. XLV, really quality consolidation, decreasing volume over the 5-day moving average. Trying to get out of its stage one base. The 200 days going flat, now starting to turn up. The 50-day, we'll need a couple more weeks to catch up to the 200-day, but overall, really like the price action out of healthcare. And we kind of have like three healthcare adjacent themes. We have XLV, we have XBI, and then new to the group is ARKG, the genomics. Huge move up yesterday, 7.1%, then consolidating today on lower volume than yesterday, only down 1.5%. So those kind of three themes, or just healthcare in general, is something that I'll be keeping an eye on in the last quarter of this year. Couple groups that are continuing to show weakness: consumer discretionary, still trading under the 20-day moving average. Financials closed under the support gap, did bounce at the 50-day moving average, but really didn't close well. We had multiple attempts above this resistance gap, above the key moving averages. We're never able to close above that. So if we lose financials, that's kind of another little warning sign that the market's giving us. XRT, the retail ETF, lost the 50-day on Tuesday, inside day yesterday, then following through to the downside today. XLB, this is basic materials, uppercut and fail at the 50-day moving average. Week closed today. Where is PEJ? This is the entertainment and leisure ETF. Again, like the things that average people are spending money on, they're starting to break down in a real way here. Home builders, or sorry, aerospace and defense ETF, kind of going with that KTOS. Really good strength. And then today, a notable reversal. First day under the 5-day moving average. KWEB pulling back into the 20-day moving average. That's the Chinese equity. So again, first time at the 20-day after new highs is usually good risk reward spot. So we'll see if that gets supported or if that follows through to the downside. Home builders, such promise after all this accumulation on the way up, and very quickly came down to the 50-day, bounced, and it's starting to really accelerate to the downside. Uh, Again, not a good sign for the overall economy. And then gold miners has been just in a massive uptrend. Today, a notable reversal, losing the 5 and the 10-day. This is the first close under the 10-day moving average since August 19th. We do have a support gap here, so maybe bounce at that point, but taking note of the action today. Some weakness out of industry ETFs, while the leaders and while the indexes held up okay. Getting into the long setups, let me sort this by dollar volume, and we'll go most liquid to least liquid. First one is Palantir. This had a really ugly close on October 3rd, close under the 20-day EMA, followed by a gap up on Monday. And since then, we've just been churning higher. That IGV software ETF looks pretty solid. With this, just looking for a breakthrough today's high as a potential buy spot. But really, to set this up in a better way, we would see a pullback, a higher low, and then attack this later next week. But it is one of the leaders of the market. It has a tendency to have these kind of kill bars and then bounce right back. You can see it multiple times in the chart. So don't think Palantir is done just yet. Alibaba kind of hinted at this at the leaders list, pulling back into the 20-day moving average. Ideally, we get a gap down tomorrow and like a little acceleration move down to this 167 area as a breakout retest. As it reclaims the 20-day moving average, that would be the buy point for me, and then my stop would be whatever the low of the day is. BMNR, this triggered today with the undercut and reclaim of the support gap at the 10-day moving average as well. Um, Through today's high is buyable with a stop at today's low or another test of that area. We've had Ethereum be a little bit weaker today. So if Ethereum, again, another weakness or another weekday there, comes into the 10-day moving average, then you can manage risk against the 20-day. Open Door, we talked about how weak home builders have been. So this is kind of like a combination of home builders, home construction, whatever, and then just pure momentum, because this had been a momentum leader from 52 cents up to $10. But since September 11th, like had one and two resistance gaps down, had a nice day on October 6th, pulling back on lower volume. Today, we closed at the 20-day moving average on the lightest volume in the entire pullback. So from this kind of contraction and low volume, I expect expansion. Hopefully, home builders can bounce and we get like another momentum burst. So a gap up opening range break would be buyable versus today's low. I think if this cracks the 20-day, just because where we are in the market, it's pretty extended in the short term, because home builders is so weak, I think this probably does have a chance to roll over. So you could long or short this, just use a pretty tight stop either way. CRCL, really nice consolidation over all the moving averages. You got the 20-day back over the 50-day now. 50-day still needs time to kind of curl back up. So instead of buying on strength, would look for a shakeout into the 10-day, into the lows of this area as potential buy spot. Manage the risk against the 20-day moving average there. Bloom Energy, covered this on the leaders list, covered this yesterday. Just looking for a break through today's high as the entry. Stop would be tomorrow's low. If you want to short this, a breakthrough today's low and the 10-day moving average, stop at today's high. I think you're going to get a pretty explosive bar in one direction or the other here, given the volume dry up. And my guess is going to be to the upside. That's how I'm planning the trade out. But again, if it goes to the downside, that's some evidence that momentum is breaking down. MP gapped up today. Tons of crazy action in this name. So it's not something that I want to be buying on strength. It's something that I want to buy on an undercut. So take out the 20-day EMA, today's low, come into the 50-day. Then if we reclaim that area, that would be buyable versus the 50-day moving average. That's really the only way that I would play this one. Just too wild to play on strength. LAC, this was on the watch list coming into the day. Didn't really do anything. lower volume day to day, consolidating over the 5-day moving average. I like how it tightened up. Break through today's high is buyable versus whatever the low is tomorrow. NET, love all these lower wicks that are getting bought up, bought up, bought up. Two support gap here that we've seen supportive price action. The cybersecurity ETF is showing strength as well. Just a break through today's high, stop at the support gap low, right around 216 is the trade setup. Grab is up next. This is a name that had a pretty explosive move on big volume from like $5 up to 660, pulled in the 20-day, bounced. Looking for another test of the 20-day moving average at a higher spot with the gap zone right at 606 as the potential entry, and then just keep your stop under $6. SATS, this is getting just extremely tight. So another name that you could go long or short, doesn't matter because your risk is going to be managed so tightly. Very, very low volume here. We're contracting in every manner at the stock. So just looking for a break through today's high as the entry. Stop would be today's low and the 10-day moving average. TMQ, I did take this trade today off the HVC, the high volume close from the gap up on October 7th. Just looking for another retest of that area if you're not already in the name. Stop would be yesterday's low. Dave is up next, a software name that made its high on July 7th. This is another name that I think could kind of go in either direction, is going to be good market feedback for me either way. Um, but when it was showing relative weakness under the 50-day moving average, we had the shakeout on Tuesday, gap up, test the moving averages of the 20 and the 50 on Wednesday. And then today, inside candle, lower volume, just looking for a push through that 20-day moving average as the entry, stop at today's low. A gap down, take out of today's low would be shortable versus the 20 and the 50 on the upside. And then Fubo, it's a stock that made a massive move at the beginning of this year, up 250% or so, and then spent all year just trading sideways. Um, I tried it up here and was quickly kicked out of it. Then we had a bounce under the 20-day, came into the 50, bounce, and now just building under the 50-day. This is something that I would be looking for a break through today's high, or a recapture of the 50-day moving average, and then just keep your stop at today's low or yesterday's low, pretty tight either way there. Getting into the short setups, I only found four, not not too many to cover. First one is LITE. This one made new highs and then immediately reversed. Stocks that do that are I kind of think about as potential shorts because if you're making new highs, especially after like the first test of the 20-day big bounce like this, you should see follow through to the down up through to the upside. And instead of just like pulling back on really light volume over the 5-day or over the 10-day moving average, this came in and undercut the 20-day, bounced and was weak again today. So just through today's low, losing the 20-day EMA is a short versus today's high. QS, earnings on October 22nd. So coming up here, but a little bit of a rounding top action at this resistance gap. Just looking for a breakthrough today's low, stop at the resistance gap high. That is pretty wide, so you would have to position size that way down. Otherwise, you could put your stop at whatever tomorrow's high of day is and size it a little bit higher. Roblox, this has not been really doing anything right since the gap up on earnings on July 31st. Came into the 50-day moving average, gapped up, and I did like this action where you gap down to the 50, consolidate, put in an island gap, gap back up. But then when we get back over the HVC from the earnings day, we only stay above for 2 days, and both days are followed by unfilled gaps to the downside, and then a major gap down under the 20 and 50-day moving average. We rally back into that area. A little bit of weakness today. Looking for more weakness through today's low, yesterday's low as the entry. Stop would be above the 50-day moving average. And I forgot, the NAAIM numbers came out today. So this is the Active Investors Exposure Index. Usually over 95% is when I start to get a little bit cautious. If everyone's already long the market, who else is left to buy to push my stocks higher? And fortunately, this is still it's not under invested. We're at 84%, which is only a 4% increase from last week. but still this rally is not trusted by active investors. At one point we were at like 90, where is it? 96% back in August. And for a couple weeks, and 98% back in August. And for a couple weeks, like we had pretty shaky action out of the liquid leaders. But as the exposure level dropped all the way down to 80 yet last week, it bottomed. We had a awesome rally in the S&P 500. So really given like the market is being underinvested, or not underinvested, but not overinvested, we have the liquid leaders acting great, the indexes acting great, the like speculative names such as RGTI right at all-time highs. Everyone's continuing to try to short this. It still looks like it's ready for higher. It kind of feels like we are going to get a blow off top move in the market where eventually people just throw in the towel, have to go long, just capitulate and basically panic buy right at the top. And those last couple days of an accelerated move higher are extremely profitable if you can stay in it. The way I'm handling this is I'm just moving my stops higher and higher and higher on my positions. Anything new that I try, I will try to get my stop to break even um, after a day or so of any strength. I still think you could play stuff to the long side. There's, I mean, more long setups than short setups that I had today. Um, but if we start to see some things like actually breaking down from the leaders list, it might not be a 1 or 2 day pullback. It might be like a full correction here. So that's going to be the daily market recap for Thursday, October 9th. Hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Go Cubs.